Welcome back to another exciting episode where we break down the juicy details on Royal Bank of Canada, ticker symbol RI. Today, we've got a stock that's been turning heads with some impressive numbers. So grab your notepads, hit that subscribe button, and let's dive into RY's financial world. Alright, let's kick things off with the price-to-earnings ratio. Royal Bank's PRTTM stands at 11.71, slightly below its 5-year average of 11.83. But here's the real kicker, the forward PE ratio is only 7.65. That's lower than the trailing PE, which could indicate some exciting growth prospects. Now, let's talk about the PG ratio, which is a handy tool to gauge a stock's value. RI has a PG ratio of 2.34. Typically, a PG ratio under 1 suggests undervaluation, but this one's a bit higher. Keep an eye on this number. Moving on to profitability, RI boasts a return on equity of 14% and a return on assets of 0.7%. These numbers indicate that RI is efficiently utilizing its assets to generate profits, which is always a good sign for investors. Earnings per share for RI is at 7.66, and the expected EPS growth over the next 5 years is 5%. Steady growth can be a green flag for long-term investors. For all you income-seeking investors out there, RI offers a dividend yield of 4.44%. And here's the kicker, it has maintained a 4.89% dividend growth rate over the last 10 years. That's music to the ears of dividend investors. RI's operating margin is a solid 29.4%, and the profit margin is 18.6%. These margins show that RI is efficiently converting its revenue into profit. In terms of revenue and earnings, RI has seen a slightly positive trend over the last 2 years. While they haven't skyrocketed, they've held steady. This stability might be attractive to risk-averse investors. However, the values from 2 years ago and the current ones are very similar, which has led to the total return of Royal Bank of Canada over the last 5 years being lower than the VO ETF. RY's debt-to-equity ratio is 3.64, which might raise some eyebrows. However, the long-term debt-to-equity ratio is a reassuring 0.11. This suggests that RY is managing its long-term debt quite well. Over the last 52 weeks, RY's stock has experienced a minus 3.40% return. Keep in mind that short-term fluctuations are common, and this might present a buying opportunity. Royal Bank of Canada boasts a hefty market capitalization of $125.58 billion, making it one of the big players in the financial sector. Now, for the moment you've all been waiting for, Analysts Predictions. On average, analysts believe that RY's stock price will hit $127.02 in the next 12 months, representing a potential upside of 41.94% from the current price of $89.65. But here's the twist, our very own analysis suggests a fair value of $106.58, which is still above the current price. This suggests that RI might be undervalued, even if it falls short of the analyst's target. So, there you have it, folks. Royal Bank of Canada, RY, seems to be a mixed bag of solid fundamentals, a dividend powerhouse, and the potential for significant upside. Remember, investing always carries some level of risk, so do your due diligence and consult with a financial advisor before making any investment decisions. But this one sure does look intriguing. Thanks for tuning in, and don't forget to hit that like button and subscribe for more juicy financial insights. Until next time, happy investing!